Kitco News coverage of FreedomFest is brought to you by Coin Payments, crypto payments made easy.
Hello, I'm Michelle Makori, and this is Kitco News coming to you from FreedomFest 2022. We are in Las Vegas, where it is very hot, but not nearly as hot as the latest inflation data. CPI soaring 9.1% from a year ago. That is the fastest pace of inflation since 1981. And joining me now to talk about this is the man that helped the Reagan administration tackle inflation back in the 80s. I am thrilled to welcome to Kitco Arthur Laffer. Art, so good to have you with us.
It's a pleasure. Thank you for having me. It's been real nice.
And of course, Art served on President Reagan's Economic Policy Advisory Board from 1981 to 1989. You were on the advisor to President Trump, and you were awarded the Presidential Medal of Freedom. Great honor indeed, and it's a great honor to have you with us.
I didn't deserve it, but I love it. I'm not giving it back.
Well, you know, that's a subject to debate. I think many would argue that you did deserve it.
Well, thank you.
What is not subject to debate is that we have such searing hot inflation, as I mentioned, CPI coming in at 9.1%. Estimates were for 8.8%. So break it down for us. What does this figure really mean? How does this compare to real inflation?
What's really interesting about this number is I thought it was going to be 8.2.
Oh.
Now, the reason is the CPI inflation is a 12-month number. So it's comprised of 12 monthly numbers. And if you look at the numbers that are dropping off the index, they were very, very high 2 months ago, 1 month ago, and this month. They were very high. So I thought this would pull the index down. But it so happens that this monthly number that came in was the highest in ages, in fact, the highest ever in recent times. So this is really bad news. If you look at the quarterly inflation rates, they're all above the annualized rate, which means this thing is accelerating. It's getting faster and faster and faster, and there's no sign of it topping off or leveling out or any of that. It's a very bad sign for this administration. They're in deep, deep trouble.
Well, I think before we talk about how to tackle inflation, I think it's important to acknowledge the core reasons for inflation, because it's something that this administration seems to be in somewhat of denial about, if I may say so, that the Biden administration does not regard the unprecedented fiscal and monetary stimulus as one of the reasons that we have this inflation. In fact, the left is pushing for even more stimulus with a watered-down version of the Build Back Better plan. Biden also calling it the Putin price hike, trying to put the blame on Putin. Now, granted, the situation there has exacerbated the matter, but what are the real reasons that we have the soaring inflation?
Let me do one other one that's important on inflation. The producers of a wholesale price index, producers price index, is much, much higher than the consumer price index. And that's at the stage earlier before the consumer price. So it is pulling up this inflation as well. Now, what's happened is this administration thought that money doesn't matter, government spending doesn't matter. This is modern monetary theory. You can just spend all you want and nothing matters. And this is Paul Krugman and these other people like that. And you know, the truth of the matter is inflation is important, and it is caused by the bad spending. If you have too much money chasing too few goods. And what they have done with their stimulus package on the COVID is they've given all these people welfare payments, so they've all left the labor force. So the unemployment rate is very, very low, but not because we've got a boom in the labor market, because they've convinced everyone to quit working. And so that's why that's happening. Participation rate is also extremely low. Again, the same things, all of these combined together started the inflation thing, and there's nothing in the monetary policy of this country that will stop it.
Okay, but how can inflation be tackled? Assuming you crafted policy, fiscal and monetary, what would you do? Well,
let me tell you what we did in the late 70s and 80s. You know, we had an inflation that was probably even higher than this, and we had a president who wasn't, I thought he was going to be worse than Biden, but he wasn't. Jimmy Carter was really bad, but Biden, I think, is even worse. But we had that inflation coming up there. There are two things to do. One, you've got to make money scarce. You've got to tighten money, and then you've got to make goods plentiful. You know, if you have a bumper crop in apples, what happens to the price of each apple? It goes down. Right. If you have a bumper crop in the production of goods and services, what happens to the price of each unit? It goes down. The inflation gets stopped. So we had the tax cuts in the early 80s to stimulate economic growth and an increase in the supply of goods and services. And we had Paul Volcker allowing interest rates to exceed the rate of inflation, which made for tight money. So we had tight money and we had expansive production policies, and we were able to bring that inflation under control very, very quickly with a boom, a stock market, amazing behavior. That's exactly what they should do now, but they don't have a clue. These are all neophytes here. They've never worked before in their life in this area. I mean, there's no Paul Volcker on the Fed board. There's no Alan Greenspan. There's no Arthur Burns. There's no McChesney Martin. These are all people selected by characteristics other than their expertise, and they don't know what they're doing. They're raising the interest rates. Get out of the interest rate business. Stop supporting, let interest rates go to, what would you be willing to pay for a bond, a government bond in this environment? You know, if you look at it, what would make that? Well, it's got to yield a lot higher than, with the 10% bond yields less than 3% with this inflation.
So, as you mentioned, in order to tackle inflation, Volcker raised rates higher.
Let them seek their own level. He not only raised them, he let them go as high as they wanted to go. He didn't cause it to go up. He just said, let interest rates be where they should be, and that's what brought it down.
But he raised interest rates higher than inflation.
Yes, he let them go much higher than inflation, which is what makes money tight.
But it's unlikely that we're going to see Fed Chair Jerome Powell do that, even though he says that tackling inflation is his top priority and he'll be more aggressive.
Then it's very unlikely we will see inflation abating. They want to spend more money and they want to keep interest rates low. Guess what that's a formula for? Ever increasing inflation. And unless they make money tighter, and unless they make goods more accessible, production more, and unless they let interest rates rise to their natural levels above inflation, you're not going to have inflation stop. I'm very pessimistic about it. And I think, we're in for a long run.
So you don't see the Fed being as aggressive as it needs to be? No. Well,
they really aren't. They don't know what they're doing. They aren't experts on this.
Well, I mean, it's interesting because you mentioned the monetary supply, and as we know, about 40% of the total monetary supply, M2, has been injected into the economy since 2020, and yet Jerome Powell, commenting on M2, says that he doesn't actually believe that it has important implications for the economic outlook. He said this remark in a semi-annual monetary policy report to Congress last February, saying, and I quote, "The growth of M2 doesn't really have important implications for the economic outlook." It's kind of mind-blowing. I see you're smiling.
And where does he get his PhD? How does he get his knowledge? That's not good economics. And he's just spouting some staffer's phrase to him so he could get through the committee hearings. We need someone who wants to solve the problem, not someone who wants to make political points.
Okay, but it doesn't seem as though we have a Fed that has the resolve to solve the problem.
And they don't know how to.
So what happens? How long do we see inflation persisting for? How high does inflation go?
I can't forecast it for the next century, but it doesn't look like there's any lid on it so far as I can see. This inflation number is increasing. It's increasing at a faster rate, and there's nothing out there that I see that would cause me to believe it's going to be slowed down.
What about a recession? There is, on the one hand, concern that if you raise rates, we're going to have a recession, although technically, based on estimates for second quarter GDP, we are in a recession, which is 2 quarters of negative growth. Yes. But the concern has been we raise rates too much, the country goes into a recession. Is that what's needed to bring down inflation? No,
you don't need a recession to bring down inflation. That's a Larry Summers model. And I understand his model. He thinks everything is demand caused. But as I described, we need tight money and we need tax cuts to increase the supply of goods and services. We don't need a recession. In fact, when we got rid of inflation with Reagan, we had one of the biggest booms ever. In the 1920s, they did the tax cuts, a huge boom, and prices actually fell during that period. John F. Kennedy with the huge tax cuts in the 1960s, the huge boom, the go-go 60s it was called. Inflation was down and we had a surplus in the budget. That's what we really need is pro-growth fiscal policy and also other regulatory policy. And we need tight money by letting interest rates be higher than the rate of inflation. That's what we need, and that would solve it very quickly without a recession. But unfortunately, these people don't understand that.
Well, you mentioned Larry Summers, and he did understand that it was dangerous to stimulate the economy the way that the Biden administration was doing. He said it was the least responsible economic policies of the past 40 years. But as you're just mentioning now, he said it's very unlikely that we're going to see inflation come down to target range without a significant economic downturn. And he says that his best guess that we're not going to be out of this without a significant interval and 6% unemployment. You disagree?
Yeah, let me do two ways of looking at it. If the demand for a product drops, what happens to the price? It goes down.
Right?
Now, if the supply of the product increases, what happens to the price?
It goes down.
It goes down. Which way would you prefer to have it? A crash in the economy to get the price down, which is what Larry Summers says, or my way, increasing the supply of goods and services so you have a boom that brings down inflation, which is what we did with Reagan, Kennedy, and the 1920s.
Well, that calls for some serious deregulation if you want to.
And tax cuts,
Yeah.
and especially at the highest end. I mean, you really need to make people want to work. It means stop paying people not to work. If you tax people who work and pay people who don't work, do I need to say the next sentence to you? I mean,
No.
Please help me in this. You know, this brings me to the one thing that I'd love to, if you've got a second, I'd like to talk about the theorem of redistribution. This is not left-wing, right-wing, Republican, Democrat, liberal, or conservative. It's what happens in economics. Whenever you redistribute income, which is exactly what Biden does and wants to continue doing, you take from those who have a little bit more and you give to those who have a little bit less. That's what redistribution is.
Right.
Now, by taking from those who have a little bit more, you reduce their incentives to work, and they will produce a little bit less. By giving to those who have a little bit less, you provide them with an alternative source of income other than working, and they too will produce a little bit less. The theorem here is very simple. Whenever you redistribute income, you always reduce total income, period. It's math. That's what they've done. And now we have an economy that's in a recession or slow growth, has no growth for years, and we're having high inflation. Duh.
Well, just to counter that,
Yep.
playing devil's advocate here,
Please.
the Biden administration claims that they want to tax the rich, that the billionaires need to pay their fair share. Do you really think that if a billionaire is making less, it would disincentivize him to continue with those giant aspirations?
Of course it would. It'll incentivize them to shelter their income. What we know from this, and I've got this book coming out, it's going to be out in September. It's called Taxes Have Consequences. It's the whole history of the U.S. income tax from the perspective of the redistributionists, the top 1% and the highest marginal tax. Every time we have raised the highest marginal income tax rate in this country, the economy has gone right into the doldrums. Now, every time we've lowered the tax rate, it's boomed. Every time we've raised tax rates on the rich, it has hurt the rich. But what they do earn, they shelter. So what happens is the rich get poorer, that's true, but the poor get poorer too, but not quite as fast as the rich.
Well, you were part of trickle-down economics, Reaganomics.
This is it.
And the Laffer curve, which shows that there is a point where you can decrease tax cuts and increase the tax revenue.
Yes, but it's nowhere near where we are.
So what would be the optimal position on the Laffer
The optimal
curve?
one is what I did for Jerry Brown in 1992 when he ran for president. We got rid of all federal taxes, all of them, with the one exception of sin taxes. The reason we have sin, I say, we Americans don't like drunk people smoking while we shoot each other. Sin taxes are there to stop people from doing things, not for revenues, but they're a small portion. We got rid of all federal taxes and had two flat rate taxes. One on business net sales, or if your audience is Democrat, value added, and one on personal unadjusted gross income. A flat tax, not from the first dollar to the last dollar. If you replaced all federal taxes, the income tax, the corporate tax, the capital gains tax, the death tax, all payroll taxes, both employer and employee, Medicare, Medicaid, all of these taxes, all excise taxes, tariffs. If you got rid of all of those, you could have a low rate, broad-based flat tax of about 13%, which is what we did with Jerry Brown. 13% flat tax, that's it. And you would see this economy take off like a jackrabbit. It would be amazing. Jerry Brown went from 8th in the race, Democratic primary now, to 2nd in the race, facing that blue-eyed guy from Hope, Arkansas, what was his name, Billy Clinton. I remember how he did his lip. I mean, we went for that. I mean, we could have beaten him and we could have won the thing. We got the second most number of delegates in the Democratic primary. That's what we need to do on taxes.
Do you currently see anyone in the political leadership from either party that looks like they have real solutions like those that you are proposing?
Yes, I think virtually every candidate, of the candidates that ran in the Republican primary in 2016, 12 came to my office for holy water on their tax plan. All of them were in the right direction. The first time the Republicans have been in the right direction ever. I mean, the Republicans used to be the tax collectors for the welfare state. They voted against all of Kennedy's tax cuts, all of the great stuff. The Republicans were the problem. Now the Republicans are united on trying to lower the top rate, broaden the tax base, and get it. Trump's corporate tax cut in 2017 was spectacular. It really worked, and revenues increased substantially. I mean, and you had the lowest unemployment rates, the best. I mean, it was
Lowest
amazing.
unemployment rate for minorities across the board as well.
For everyone. I mean, we want to get everyone employed, and it was just spectacular. Now the Democrats want to reverse it. Go figure. I mean,
You did say during a recent appearance with Larry Kudlow that high taxes lead to slow growth, lead to high inflation, lead to poor economy. So explain how high taxes lead to high inflation. Break that down.
first things, high taxes cause economic growth because it disincentivizes people to work, produce, and increase output. So if you have smaller output, if there's a shortage of apples, what happens to the price of each apple? It goes up. So therefore, with high taxes, you'll have a shortage of the production of goods and services, which will lead to higher inflation, and it will also lead to lower economic growth. That's exactly what I was saying to Larry Kudlow in very simple terms, is whenever you discourage production, you cause a recession and you cause higher inflation. It's just straightforward, simple, basic Econ 1.
Supply side economics. But on the demand side economics, you could argue that higher taxes curb spending and curb demand,
Well, they do.
and therefore bring down inflation.
And they bring down, that's not. They do curb spending, they do bring down demand, that's true, but they reduce the supply of goods and services in the production. Now, if you have the same amount of money and less goods and services, what will happen to prices?
Goes up.
Thank you.
All right.
And this is something Larry Summers should understand. I mean, it was his Kennedy, John F. Kennedy, that I learned my economics at Yale. Now, Yale's not the same as it was, but I mean, you learn that you grow out of price increases. You know, if you have high prices, supply more goods. Look at the poor oil companies today. They prohibited from drilling, they prohibited XL pipelines, they can't. Now all of a sudden there's a surge in the demand for oil. What should they do? They can't increase the supply. Now if you have an increase in demand, you can do two things, increase supply or raise price. That's, what do? They can't increase in supply because of Biden's regulations. And now so now they raise the price. You can't do that, that's immoral, that's not, come on, that's called economics.
Well, maybe if we free up the regulations for domestic oil and gas, we would be able to solve the problem there. But
Low rate broad-based flat tax, spending restraint, sound money, minimal regulations, and free trade, and then get the hell out of the way. And the economy will take off and solve its own problems. It doesn't need old Joe to tell them what to do.
well, old Joe claims that,
I'm older than Joe, by the way, 2 years older.
well, President Joe Biden claims that inflation is his top priority. But again, we're seeing a disconnect there between fiscal policy and the so-called need to fight inflation, because as I mentioned earlier, the Democrats are still trying to push a watered-down version of the Build Back Better plan.
It's amazing.
Joe Manchin standing in the way there, but if some version of that does get passed, what do you anticipate?
Well, it'll be higher inflation. I mean, as long as they don't understand that you've got to free interest rates and let them seek their own level. And, you know, everyone says that inflation's their top priority. Jimmy Carter did too. And look what happened to him. Look what happened to the U.S. economy. Do you remember the energy restriction? Well, you of course don't. You were way too young. But we had a 55-mile-an-hour speed limit. You had to recirculate the air in airplanes to save on the heating costs of bringing in fresh air. You had prices at the pump that were below market clearing price, so you had to wait in line for 2 hours to get a gallon of gas. We then had wellhead price control, so anyone who produced oil sold it at a low price. Then you had excess profits taxes. I mean, all the wrong things. I'm just waiting for Biden to start proposing all of these. He was thinking about putting a tax on oil companies because they're gouging, as he said. All of these people follow the same mistaken path. until we get into office, and then we'll save you.
But on the state level, we have several states fighting inflation by giving out inflation relief checks. We're seeing this in California. Governor Gavin Newsom has a $9.5 billion in direct payments being paid out to taxpayers of up to $1,050 per household for individuals making under $250, and $500,000 for joint filers or heads of households is the upper limit there. Similar moves being taken in Hawaii, Maine, and New Mexico, also giving out benefits, keeping it within a income threshold, but still giving out benefits to combat inflation. And it's these benefits that kind of caused inflation in the first place, as we've just discussed.
Go back to your redistribution theory. If they're giving people money based upon some characteristics other than work effort, and they're taking it from the people they raise the tax on in California and Hawaii and these other states are the highest income tax rate states in the nation, they're going to cause collapses in the economy and cause higher inflation. It's just straightforward, basic Econ 1. Now you call it supply side economics. We used to call it just plain economics.
Well, you're painting a very bleak picture here.
Well, it's the bleak policies that are painting the picture, not I. I'm just interpreting it for you.
What can we do to get back on track?
The first thing you can do is change the election results in November of this year. And although the Republicans are far from blameless, I think a good change in that they're all on the policies there that are much better policies. Then you've got to go to 2024 and put someone in there who will do the job. You know, we did it back in the 1980s. The skies cleared, and we got Ronnie in there. We got our tax cuts. We brought the highest tax rate down. Think of this now, from 70% to 28%. Do you remember what the period was like? From January 1st, 1983, when the tax cuts took effect, to June 30th, 1984, 18 months, a year and a half, real GDP grew by 12%. It grew at an 8% per annum compound rate. We had Chinese growth rates.
Well, Chinese double-digit growth rates, but China, I don't think we really want to cite them in terms of the growth rates that they claim they have.
They used to be really good. Now they're getting into the bad game.
Well, my point is that China doesn't always give an accurate picture of its GDP growth.
I don't think we do either, but they're less accurate than we are. You're totally right on that.
Well, but you mentioned that it's about putting Republicans into office.
No, putting tax cutters and spending restrainers.
Okay.
At this time, it happens to be Republicans. In the 60s, it was Democrats.
Okay.
It was John F. Kennedy and his crew were supply-siders, and the others were the weirdos.
There is an issue that you think is problematic for inflation that actually Republicans and Democrats are often on the same side about, and that's breaking up a big tech. And you've recently said that antitrust laws make inflation worse, particularly with regards to big tech. So break that down for me.
Well, let's just start it.
It's true because you said it.
Yeah, but,
I'm quoting you to you.
Well, Klobuchar has a bill that goes in to break up the big techs. And a lot of Republicans who see the anti-conservative bias in these big tech companies want to hurt them. But it would do a lot of damage. You know, big tech companies have had an enormously successful record of bringing down prices. I mean, all the Googles and all this stuff have really reduced the cost of products. Their price DPI has gone down 22%. The other indices have gone up 20%. So they've reduced the cost of marketing. I mean, all this is you could, if you had Klobuchar's bill put in 2010, you wouldn't have a smartphone. It wouldn't be allowed. You'd have to sell each individual computer, clock, all of that stuff has really been really amazing. And they're trying to get even with the big tech companies for their political shenanigans, when in fact they would hurt the economy, in my view.
Okay, and we know that for the most part, technological developments are deflationary.
And it's wonderful. I mean, just imagine all the wonderful stuff we've had from high tech. Now, we also got some bad political stuff.
So back on the politics, November midterms, perhaps Republicans take back the Senate and the House.
Could be.
But even then, a lot of things could still be stalled.
You've still got Biden as president. You've still got the veto. You've still got his veto of legislation. You've still got his executive orders. You've still got his control of all the bureaucracies and all those people through all these agencies and departments that are putting in terrible policies all over the place. That's for at least 2 years. Then you've got an election. Election is in November of 2024. The new president will take office on January 20th. If you have a right constellation, which we had in 1981 when Reagan took office, then you take about a year to get your legislation up and through Congress and all that sort of stuff, because you got to get some of these 60 votes and all that sort of stuff. Then by 2026, we might be able to start getting some really good pro-growth, anti-inflation policies. It's a long time.
2026.
That's what it takes. I was so depressed in the 1970s. I taught at the University of Chicago, and I was just so depressed. I saw no end of the terrible down spiral of the United States. And then I started getting very optimistic about 78, which I think is about now. Equivalent of 70. But it's still, 78, it took us until 83 to get those tax cuts into effect.
So paint me a picture. What does the economy look like from now until 2020?
I don't see how I can paint you a very pretty picture because, basic economics.
A real picture.
Well, the real picture is I think we bounce along and we looks like 1978, 70, and 80, 81, 82, which were terrible years. All of that due to bad policies. And then finally, bang, one day on January 1st, 1983, the tax cut takes full effect. And on that day, this thing goes beep. It's amazing how tax cuts don't work until they take effect. And then they really work.
We also have, unlike then, this climate change narrative and this push to decarbonize and this push to move to cleaner energy sources, which has been one of the big reasons, as we just mentioned, that we're seeing oil and gas prices soar because of lack of investment in that sector.
Now, why can't they do something that Al Gore and I agreed upon? I don't know about global warming. I'm not anti it. I don't know. I'm not a scientist in that area, but it makes sense to me. And so what I suggested, what Al Gore and I put out together was we'd have a carbon tax to reduce the incentives for using carbon emissions. And we'd offset that carbon tax with a tax rate cut on personal income and payrolls. Okay. And then that would eliminate the worry of a recession. But no, these Democrats, all they want is the carbon tax, but they won't do the offset on the personal tax cuts.
The carbon credits.
Huh?
The carbon
credits are silly. Credits aren't tax cuts. They're credits that are allocated to poor people. And that's the redistribution theorem. What you need to do is make a dollar for dollar income tax rate reduction across the board for a carbon tax. That would distort production away from carbon towards cleaner fuels, cleaner energies, and don't have government mandates. Let people solve their problems themselves. If solar makes more sense than carbon, people will use it. You don't need a government gun at you. This is the way they do it with credits and all this nonsense and rebates to poor people and all that, the Gavin Newsom stuff. It's just going to kill the economy. A carbon tax with an income tax rate reduction, flat tax. Bam, you'll have a good economy and you will solve carbon problems and clean the energy in the environment.
Well, Art, you clearly have a lot of theories and a lot of advice.
And a lot of experience where it worked.
Yes, true. Which is why I want to ask you, what is the best piece of advice you have ever received?
I have no idea. I've never thought of that. Don't smoke. Don't run across the freeway drunk.
All valid pieces of advice, absolutely.
I don't know what my best. My dad was my best advisor. He's my best friend. He was the best man in my wedding. So he was a very successful business person, big company. And, he gave me tons of advice. Justin Dart, the reason I was so close with Reagan was Justin Dart was my godfather. And Justin Dart was head of Reagan's kitchen cabinet, as you may know, Reagan's best friend. And so I've been very blessed by having very competent, really professional people.
So it sounds to me like have good mentors.
Good mentors. Bob Mundell, George Schultz. George Schultz hired me 5 times. He never learned not to do it. So he kept hiring me. And I just loved him. More lower than life itself. And Justin Dart, my dad, Bob Mundell, all these people were major mentors of mine. And the economics that we've done in Chile, the economics we did in Margaret with Thatcher. Thatcher used to come over and stay at my house, she and Sir Dennis. I was the only low-level American over there working with her. We've done all the stuff here with the states, Prop 13 in California, all this stuff I've done as well on all these. It works. And it really does work. And it works time, and it makes sense. If you tax people who work and pay people who don't work, you know you're going to get less people working. As Larry Gatlin says, it ain't rocket surgery.
It ain't rocket surgery.
Don't you love that? Don't you love that?
You're full of good quips today.
Thank you.
And full of great insight. So thank you so much for joining us. It's been a real pleasure.
My pleasure. I loved it. Loved
Thank
it.
you so much.
Good to be with you.
Kitco News coverage of FreedomFest is brought to you by Coin Payments, crypto payments made easy.